My name's Andrew Maxwell. I'm a professor of entrepreneurial engineering at Lausanne School of Engineering at York University. The paper I wanted to talk about was one I wrote with Moren, Lévesque and Scott Jeffrey, and it was around business angel investing. And so the interesting thing for me, and the thing that was motivating for me, was that I was involved in a lot of startups with a lot of my students, a lot of tech entrepreneurs, and they were always looking for investment. It seemed to me every time they went out, they were asked some different factor, and they were usually rejected, and the rejection reasons seemed to be completely different. And so what I was trying to understand was, were there some common factors, some common things that we could learn about that process? In addition, when things went to the next level, it seemed like questions they were asked were completely different from the early level. Fortunately, I was also volunteering with a TV show called Dragon's Den in Canada, and so as part of my entrepreneurial activities, I actually had access to all the videos. So I had video interactions with about 500 entrepreneurs a season that I could take away, analyze. The nice thing about having videos is you analyze them, even if you want to change what you do later on, you can go back and look at them again. And so what I started to do was to look at these videos to see if I could see some patterns. Most of the time at the beginning of an interaction, the investors were looking for reasons to reject opportunities. And at a certain point, the nature of the conversation would change, and they were looking for reasons to choose an opportunity. And the interactions, the dialogue, the factors that were looked at were completely different from that early stage, these critical factors that we found for rejection, which were non-compensatory. In other words, any one of them would cause the opportunity to be rejected, and more than 85% were rejected. The reasons for choosing an opportunity were something to do with the managerial capability, the relationship, other factors that were distinctly different from the first ones. So it was really interesting to actually break down what had been a complex issue into something that was quite clear. We have a lot of research that says that investors don't know how they make decisions. Even when we asked those investors how they made decisions, they really didn't know. They would always say there's a lot more factors, it's a lot more complex a decision. But actually by observing the factors, we were actually able to show that they were much simpler decisions and ones that were consistent over time. I think if you just had one person, it would not have been as consistent, but the fact of that show having a dynamic of 5 people and having to give reasons for rejection gave us a great data set. Early on in your business idea, there were 8 factors that you really need to think about in your business and you need to fix. Far too often I find that entrepreneurs are working on very complex issues about their business and their growth and building the team when they haven't got basic things in place like demand, a market, a way to protect, being close to customers, not going to run out of cash. So there's some basic factors that you need to take care of. Don't start worrying about the future until you've taken care of those. And if one of those is not good, then just fix that before you go on. And from the investor point of view, understanding your decision process actually makes you have better decisions and make them faster. So it actually helps on the decision-making side too. A lot of these things can apply in the venture capital world too. It's not identical, but the challenge in the VC community and the investment community is that usually you start off by seeing some people lower down on the organization before you see the senior people. The senior people have built these heuristics themselves. They kind of know what they're doing. But now they actually have some frameworks and tools that they can share with people and train people so that they're better prepared to be an entrepreneur or to be an investor.